But by looking at these, you can see why I believe, and I've said this for now since forever, that silver is the most undervalued asset on the planet. So it's a pretty simple to understand. I believe eventually we're going to see a few things happen. Officially suppressed, we all understand the game, how it's played. You have the paper derivative dictating the price of the hard asset. It's upside down. And but that gives us opportunity, all of us. I mean, I think I've been telling people since literally for over a decade that they need to be in hard assets, commodities, more specifically physical silver.
While the spot price per ounce of silver is magnitudes lower than gold, it's nonetheless a viable investment in uncertain markets. In 2022 especially, silver has become a draw for retail investors looking to put their cash into commodities. Silver has experienced characteristic price volatility in 2023, but experts see a path higher for the white metal. Gregory Mannarino, founder of TradersChoice.net, expresses that silver is the most undervalued asset on the planet. The price of silver is artificially suppressed due to the paper derivative market dictating its value. Despite this manipulation, he sees an opportunity in physical silver and other hard assets, advising people to invest in commodities. Mannarino has encouraged people to invest in physical silver for more than 10 years because he firmly believes it will remain valuable. He suggests looking at specific indicators like the Dow Jones Industrial Average to Gold ratio and the gold to silver ratio to understand why he thinks silver is undervalued. By analyzing these ratios, one can gain insights into the relative pricing of silver compared to other assets like gold and equities. He predicts that there will be a big market crisis that will affect stock markets all around the world. As this event unfolds, a substantial shift in investor sentiment and behavior will result in a migration of capital from the debt and stock markets toward tangible commodities like silver. In economic turmoil, precious metals like silver often gain favor as safe haven assets, hedging against currency devaluation and economic uncertainty. Mannarino advises people to become their central banks and hold hard assets like physical silver to protect themselves from the debt bubble and inflation. Now let's watch excerpts from Gregory Mannarino's interview with Soar Financially. Before we start, smash that subscribe button and remember to enable post notifications to stay updated on our latest uploads. Thank you and enjoy the video.
Look at the Dow Jones Industrial Average gold ratio and the gold silver ratio. But by looking at these, you can see why I believe, and I've said this for now since forever, that silver is the most undervalued asset on the planet. We're gonna see again a debt market meltdown, which is going to pressure equity markets around the world. Where the bottom is with regard to the Dow, no one knows. What we do know is the Fed jumped in here at Dow 6,000, stock quantitative easing 1. So the real bottom of this market could be Dow 6,000, could be lower. Let's just say it's 6,000. I think we're going to see a 1-to-1 ratio to the Dow Jones Industrial Average and gold, and maybe a 15-to-1 or maybe even a 10-to-1. Gold to silver. So, I mean, just do the math. It doesn't take a lot to figure this out. And you can see why I believe that. And commodities are real things. So what's going to end up happening, see, markets are supposed to run in cycles. Okay. They're supposed to do this. Although today, this market seems to do nothing but go higher up until very recently when the MMRI crossed 250 for the bunch time. And every time this happens, it seems like the market takes a hit. But generally, you know, you get corrections and you get pullbacks. We don't see this anymore, but eventually this is all going to turn around. We got a risk-on cycle, meaning cash deliberately making its way into the equity market via suppressed rates. When rates spike, and they're going to, we're going to get a meltdown that debt market's a matter of time. You're going to get the meltdown here. You're going to get cash bleeding out of the debt market, cash bleeding out of the stock market. It's just going to move. Cash does not fly away to money heaven. It doesn't grow little wings and fly away. It just moves from one set of assets into another. It's very simple to understand. And I believe we're going to see an ocean of cash make its way into commodities when all of this stuff melts down. And again, other assets, and we're starting to see that again with classic cars and classic instruments and artwork and stuff like that too. So it's just a matter of time. So right now, I think is this opportunity. You know, you can look at all this stuff and say, oh my goodness, it's all doom and it's gloom, but it's really not. It's about opportunity. As we started the video off, it's about people taking action, but doing their own research too. Don't listen to a damn thing I'm saying without understanding it, doing your own research. And then if you come to the conclusion that, hey, Greg Mannarino is actually right, then you take action, of course. I mean, I don't want anyone to jump into anything they don't understand. That you have to understand what you're doing before you do it, quite obviously. People need to, again, bet against the debt, become their own central bank. I've been telling this people since I started, since day one, meaning hold hard assets. Okay, physical silver, my favorite asset of all time. I'm not saying people should go all in on any one asset, but I think people need to be somewhat diversified. For now, people should be on the long end of this market. I own an ETF, ticker JEPI. I own a lot of it. I intend to buy more. This pays, the dividend varies. Right now, it's just over 10% per year, and you get paid per month, that dividend. And it also gives you exposure to the long end of the market. I happen to like that right now. I am looking for opportunities to buy more, believe it or not, because I don't believe central banks are done in inflating here. I've been putting out list after list after list of exchange traded funds, which will allow people exposure to commodities. Some of these even pay dividends. It's a nice situation. What's the easiest way to take advantage of this? Silver. All right, I'm gonna say it again for the gazillionth time. People need to hoard this stuff. They need to stack it in the corners of their house or put it in some kind of a safe or a safe place. But you need commodity exposure. Look, this market and all that is involved in it, it's not for everyone. I get that, but you need to take action and at least understand why you got to be on the opposite side of this debt hyperbubble. In the dollar is obviously a unit of debt here. Got to get out of that. Convert those dollars that are sitting in your bank account that you don't even own anyway into hard assets, silver again.
Mannarino believes that the U.S. dollar will remain the dominant global currency for the foreseeable future, despite the emergence of BRIC nations and other potential contenders. According to FX strategists surveyed by Reuters, the U.S. dollar is expected to remain strong against most major currencies over the next 3 months, as the resilient U.S. economy supports expectations of higher interest rates for a more extended period. Recent strength in the U.S. dollar coincided with a slowdown in the euro's previous strong performance, with expectations that the European Central Bank will unlikely raise rates further. Mannarino predicts a significant event, possibly a global war, to dethrone the U.S. dollar from its prominent position in the global financial system. While the U.S. dollar may appear robust compared to other fiat currencies issued by central banks, Mannarino emphasizes the importance of understanding that all these currencies are gradually losing their purchasing power due to the expansion of global debt.
Well, I still think the U.S. dollar is going to remain the prettiest belle at the ball for the foreseeable future. Honestly, regardless of what's happening with BRIC nations and everything else, it's going to take a lot to dethrone the dollar, probably a global war. But with regard to the Dixie or the dollar on a relative strength basis, it's going to remain the prettiest belle at the ball. Even, this debt downgrade here, if you think about the exposure other nations have around the world to U.S. debt, to the U.S. dollar, I could kind of understand why it's happening to a certain degree. It's going to be like this. It's going to remain this way I really feel for an extended period of time. But this does not, people don't discern generally looking at the relative dollar strength. I like to look at it on an absolute strength basis. You can look at the relative or comparative strength, and again, the dollar is going to remain the prettiest belle of all. And then you got on the other side the absolute strength of not just the dollar, but of every fiat or central bank issued currency. They're all losing purchasing power here as the global debt expands, as central banks, literally, in my opinion, I've been saying this for 10 years, are deliberately killing their own currencies here. And we're seeing the side effects of it. I mean, you can't just create cash out of nothing. All central banks are doing this to buy assets and not have a side effect or an effect of it. It's a cause and effect like everything else is. But, people don't know this stuff. They have no idea of how the system works at all. So this is why they disconnect themselves. And I think when people are presented with, let's say, something that they feel is too complicated, or gives them a headache to think about it, they don't think about it. And this is why we're not having such an overwhelming response, I think. But it's going to come. And eventually, again, I'm going to tell people how I believe it's going to play out. And you probably understand it. Is we're going to get a meltdown here in the debt market at one point. Debt market is going to melt down. Yields are going to spike in an uncontrolled fashion. That's going to destroy global stock markets, and cash is just going to move. When central banks get in here, and they artificially suppressed bond yields, what does it do? What is the effect of that? What are they intending to do by keeping rates suppressed? What it does is it opens up a doorway for cash to make its way into risk assets or equities or stocks. This has obviously hyperinflated a new stock market bubble, a real estate bubble, and caused distortions again across the spectrum of asset classes. There's not an asset today that has a real price discovery mechanism behind it. I don't think people want to be. If we are expecting, you and I, at least I am, that eventually we're going to get a debt market meltdown here, and no one can predict when this is going to happen. I mean, it's an impossibility. It's going to be at a time of their choosing. They're going to keep buying the debt. They're going to keep rate suppress central banks collectively. I don't think being in a bond here is the right place to be. I think people need exposure to the long end of the market in, let's say, an exchange traded fund that was paying them a nice big fat dividend, and at the same time giving them exposure to the long end of the market until we see an uncontrolled spiking in the 10-year yield, which is the benchmark. You know that here. That's when we run for the hills, and we're not seeing that yet. With this action is very interesting.
During potential market crises and economic uncertainties, physical silver and other hard assets may become more popular as safe haven investments. This could shift investor behavior, with more capital flowing toward tangible commodities like silver. As a result, silver is likely to be seen as a valuable asset during economic turmoil. Do you agree with considering physical silver as a potential investment to safeguard your wealth? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.